I'm not sure that there was a formula. There was a process by which we account for capital, which was actually one of the most modern processes, looking at value at risk and how much could be afforded, and what we could therefore transfer to the government. And I think this is something other central banks have picked up. We were asked to make presentations elsewhere. It is something that offers a basis for discussion going forward, and it's something we should think about.
So what was it that you suggested to the government, and what was the response that you got from the government on this?
No, I think what we had suggested is we need a scientific process by which we evaluate how much capital the RBI needs, and based on that we declare a dividend, rather than negotiate this every year around budget time. How much do you need? How much can we spare, etc., etc. Let's do it on a basis.
Do you believe that process is arbitrary somewhat?
Well, by its very nature, it's arbitrary because it's based on what the needs of the government are, rather than what the RBI needs in terms of maintaining its balance sheet strength and so on. So I would start first by saying here is how much the RBI needs to present a picture of health, because we need a strong central bank, and then anything that is excess should be paid over to the government. It is the government's. The RBI has no call to keep anything that is over and above that. The magic question, of course, is
what is that number?
What is that number? And for that, having an objective process of deciding how much that is what Mr. Gandhi was probably referring to. We had a team within the RBI do the calculations, prepare the structure. This splendid young team, which essentially read the latest literature and put it together. And the question is that the basis for proceeding forward? It is state of the art in determining how much capital the RBI needs.
So was that taken forward at all in any form or fashion by the government in your conversations with them?
I think we had a discussion then. We put it on the table. The board at that time approved it in a sense of this is a basis for discussion going forward. The government at that point decided that they needed to learn more. So it wasn't that it was rejected. It was just that we never concluded on that.
So given the work that you did in the past and the fact that there is this committee that's looking at this issue, what should be the guiding parameters?
Well, it's up to the committee to figure it out.
No, but what would you suggest? I mean, what was it that you put on the table?
I think the committee will think very carefully about this. And I think the two or three big issues that it will consider first are that what is the appropriate level for the RBI to maintain a strong, healthy balance sheet, especially when it looks, when it's outward facing towards the rest of the world. The second issue is, okay, once you've decided this is a quantum that is excess, how do we actually pay it out? Because there's an accounting issue in whether you can pay out things that are not generated through profits, but that are generated through, for example, foreign exchange depreciation. And that accounting issue has to be dealt with because that is a constraint. And the third issue is how do you pay it out without monetizing a large part which you cannot really afford to given the liquidity conditions in the economy. All three have to be thought of. My sense is that previous people have opined the best way to actually pay out a large dividend to the government is to write off the bonds that you hold on your balance sheet of the governments. So the government's debt comes down and you don't monetize the process. That's something to think about, but that's more me speaking with my academic hat.
Well, let me continue to get you to speak using your academic hat. Arvind Subramaniam had said that you differed with him on the use of the capital reserves. His idea in the economic survey that he put forward was sort of a public asset rehabilitation agency or recapitalization of banks using the 4 lakh crore rupees, which he believes was excess capital. You differed with him on both these. Why?
Well, the public asset reconstruction agency, what people call the bad bank. My worry was that bad bank would be manned by government or public sector officials. And so you wouldn't solve any problem in terms of reducing the bad loans because it would go from the pocket of the public sector banks into the pocket of the public sector reconstruction corporation. Why would they have any stronger incentives to deal with the bad loans than before? So it seemed to me that this was just changing from one pocket to another, something we do often in the government in India today and in the past, and it's something that I don't think changes very much on the ground.
On recapitalization?
On recapitalization, it led to the very issue that we were just talking about, If the banks are granted this money, will they spend it? Will it lead to monetization? And he had some scheme for trying to ensure that it actually wasn't spent. To my mind, all these clever schemes can be short-circuited by simply saying, government, we owe you money, we have some of your bonds, we'll write off those bonds. And so your debt level, the government's debt level would come down. Now you figure out how much you need to borrow in the ordinary scheme of things. It also is the right thing to do because remember these surpluses have been built up over many years.
Yes.
It is what essentially belongs to governments over the years.
Yes.
And to that extent, by writing down the debt, you will create the conditions for this government to move on with, based on what it should have inherited from past governments. So if it needs to borrow more, it should borrow more, but that should be explicit and identified and as additional government borrowing.